All right. So thanks again for joining. My name is Gene, and I'm representing NYC Resistor. It's a local to Brooklyn, New York hackerspace in Boerum Hill. Please join us in person. We have open craft nights on Mondays and Thursdays most weeks. Tickets are free. And we also try to do events because rent's expensive. We try to keep doors open and make it a community space, and also do things that we think are interesting for people. And that's what this is about. So before we get into cyber risk insurance with Leroy, I just want to quickly mention there is a code of conduct. It's not difficult to follow. The way I'll summarize it is we want you to be kind, to yourself and others, and just show respect. It's very simple. If you want the details, there's a link in the event. Again, thank you for joining us. It really helps to keep this community going, and it also helps us to understand what people are actually interested in. So topics like this don't typically get covered in this kind of environment, especially with just a suggested donation. And I think it's detrimental to actually improving, the cyber risk situation for everybody, because once you have some awareness, it's harder to do the wrong thing or not do anything, right? And of course, these stories, the way that people prepare and react to these things are really what help us to learn and improve. So let's talk about it. First of all, Leroy, you work in cyber risk insurance for Moody's. What do you want to, I'm sorry, I'm just letting some people in from the waiting room. Let me see if I can disable that so that they can pop in automatically. In the meanwhile, Leroy, just tell us a little bit about yourself, and then we'll lay out kind of the agenda for the meeting.
Yeah. So thanks for inviting me. I'm glad to be here. My background, I started as a language analyst for the National Security Agency. So I was a Persian language analyst for a number of years, and then sort of fell into cyber maybe about 6 or 7 years ago. Where I met Gene working at a company called Flashpoint. What we did there primarily was finding online criminal communities, cyber criminal communities, and sort of figuring out how they plan to attack organizations, governments, and then share the information that we gleaned from these communities with businesses and with governments so they could protect themselves. Very interesting work, and I am glad that was sort of my pathway to cybersecurity. And then about 3 years ago, I moved over to Moody's Investor Service, a credit rating agency. So the same thing you think of for like your personal credit score, but for businesses that want to borrow money. So they go to Moody's or to S&P, which is Moody's sort of biggest competitor, or to Fitch, if you're familiar with those names. And they say, hey, give me, they pay the organization, say, give me a rating, and then I can take that rating and go raise money. And so that's what Moody's Investor Service does. That's what it's most known for. The reason that I joined is because they've realized that cyber risk is more and more of a factor in determining how likely it is that a company, a government is going to be able to pay back the debt that it has incurred. So you can imagine if an organization suffers some sort of cyber incident, it might take them a whole lot of, it might have a large financial impact and may reduce their ability to service their debt. And so Moody's wanted to have a better handle on, how should we think about cyber risk as it relates to credit risk, and how can we be more transparent and more sort of methodological about incorporating this as part of our credit rating process. So that's what I do. It's a really interesting niche for me because it's like you got the cyber part, but you also have the financial analysis part, and sort of bringing those two together to help investors understand how they should be thinking about cyber risk as it relates to financial impact and investing.
That is fascinating. I am so tempted to ask you a bunch of questions just off of that. But since we want to stick to some kind of agenda, here's what we're going to do. First of all, for everyone on the line, if you have any specific hopes for takeaways, let us know now so that we can keep those in mind. And just to give you an idea, what we're going to do is have Leroy go through a short presentation about this space, about cyber risk insurance in general. Then we'll do some questions, and we'll save time for additional audience questions. If you have anything you want to ask, put it in the chat. If you want to unmute yourself, Leroy, as long as you don't mind, feel free to interject. And again, we'll be sure to leave time in the beginning. So before Leroy starts the presentation that he has ready for us, are there any specific hopes for takeaways that anyone wants to bring up?
None at the moment, but I think there will be several along the way.
Sounds good.
Yeah, and I like the idea to maybe have an open dialogue, without being too intrusive to your presentation, Leroy.
Yeah, what I'll say is I especially with this lower number of people that we have, like I'd prefer it to be a conversation. So, I might ask you questions and, hope that you'll talk back at me and not just me ramble on at you. So
yeah, that'd be great.
I love that.
All right, let's do it.
Cool. So I'm gonna share my screen and let's see here. Hopefully you can see my screen. And what I'll say first is that this is not a presentation that I put together. I started thinking about putting a presentation together for this event. And I remember that I had a course that I took a couple of years ago where the instructor had put together this presentation that I thought was amazing and that I wouldn't be able to top. So I give all credit to Nicole Beecher. Let me just Nicole Betcher. She's the one that put this together. She actually was working at S&P, our competitor. So, but she gets all the credit for this presentation. So starting at the very beginning, like what is insurance? I think most people have a sort of sense of what it is. And it's a way of allowing organizations and people to limit their exposure to certain types of incidents, risks, by banding together and distributing that risk among many more entities. So some of the words that are commonly associated with insurance: risk, potential for something to happen, potential for a car accident, potential for a fire. The exposure is the asset or individual that can experience this risk. The loss is the typically financial impact from whatever incident happens. And the claim is when the individual has the insurance, asks for some sort of to be made whole or to have some sort of financial support for to recover from their loss. So cyber insurance itself is a very evolving field as cyber risk itself is evolving. So you see in the top there, it says 1980s that cyber insurance came out of the technology errors and omissions space. Is anybody familiar with errors and omissions insurance, like what that is?
Oh, no. Could you explain that?
Yeah, so errors and omissions is typically if you're providing a service to somebody and you have an outage or something stops your ability to provide this service to them, then they may in turn be unable to provide services to their clients. And so this errors and omissions policy makes it such that if because of your outage they are unable to service their clients, then you have that insurance to sort of pay them and say, okay, I'm making you whole for the inconvenience that you suffered from my outage. So if you think about technology, cyber, right? Like, in the early days before there were people running around purposefully, hacking into things or causing some sort of malicious damage, you might have just had an outage, right? Somebody didn't hook up something correctly, or the machine ran too long and it just ran out of steam or something. So, these early policies were really focused on outages, basically. Then you see moving along year 2000, Y2K. I don't know if everybody on the call is old enough to remember that, but it was, a response to these Y2K concerns that the technology world was going to melt down when we flipped over to 00 at the end of the year, because so many computers were at the time only programmed to focus on those last 2 digits. A lot of work went into making sure that that was remedied, but there was so much concern that there was these insurance policies to help protect people if in the event that there was some sort of large-scale incident. And when we get into the 2000s timeframe, then we start seeing data breaches be really what organizations are experiencing. Somebody's getting unauthorized access to a company's network or to devices from an organization. They steal a laptop or something, and they're able to get data from that. And this is, I think, when the cyber insurance industry really started to become more of a thing. Like, you had some of these, again, errors and omissions, or sort of smaller, more one-off kinds of cyber insurance policies or arrangements. But when you get into the 2000s, then you start seeing like a very nascent but solidifying cyber insurance space. And again, they're coalescing around the idea of data breaches. And we're going to come back to that later, because insuring data breaches turned out to be a very profitable line of business for insurance companies. And so when a few put their feet in and saw that it was pretty profitable, a lot more insurers jumped in the pool and started providing these cyber insurance policies. And that caused some problems along the road for them, because again, data breaches typically are not that expensive an incident to recover from, but then ransomware attacks came along, and those are a very different ballgame for in terms of the costs that they incur. So we'll come back to that later, and just how that has been shaping some of the recent changes and shifts that we're seeing in the cyber insurance space. We see there TJ Maxx in 2007. Now we're just having a data breach, but we're having financial information that's being stolen. And then in 2017, we have a little bit more, again, coalescing of the cyber insurance industry. There was a large incident that happened in 2017, which I think we'll get into a little bit later, that tested cyber insurance, but we'll talk about that when we get there. Any questions so far? All right.
Sure, actually.
Oh yeah, go ahead.
So you mentioned the 1980s start with errors and omissions. That makes me think of some contracts for products that I've been responsible for, where we had a software license agreement that stipulated how what customers could expect in terms of uptime and access to our products and services. And there were financial penalties for us in cases of a breach. It didn't cross my mind that insurance could potentially actually be helpful in terms of covering those costs. Is that a typical use for that today?
Yeah, absolutely. That would be, that would be a specific line of coverage, but yeah, that errors and omissions part of the cyber insurance offering hasn't gone away. It's just sort of not the one, it's not the sexy one, right? It's not the one that people are really thinking about when they think cyber. Typically, people these days, when they think cyber, are thinking some sort of attack.
Right. Yeah, that's a good point. It's comforting to know that it's more. Thank you.
Yeah. So this is a bit of ancient history, but the first written insurance policy that we know of, right, is from Hammurabi, the Code of Hammurabi, this is in Mesopotamia, for these merchant sailing ships. And so when a merchant went to borrow money, he would pay some sum of money to the lender and say, if I make it back with this ship in whole, or nothing has happened to the ship, then then you keep the money that I've given you, but nothing more. But if for some reason something happens to the ship when we're out, then you can claim the ship. So that is sort of the first idea of insurance that became known as bottomry. And it only sort of evolved from there. In the Middle Ages, they had guilds, the guild system. And these were some of the common threats that these guilds face, which were fire, theft, death to maybe a guild member. And so the insurance that they formed by coming together provided an incentive for more people to be farming. So you see how, insurance is not just, giving people money to recover from an incident, but it also has helped change a lot of technological shifts and change behaviors over history as well. And that's why, the story of insurance, although people think, oh, insurance, that's not really interesting. It has so many more intersections over history. These guild systems are sort of the precursor to group insurance or group coverage. And the idea, again, is that you have many different types of people who go into this group. The risk is shared among many different profiles of types of people. And because that risk is diluted, the cost of the insurance comes down. And so that's typically how you get coverage through your employer. That's typically a group coverage. Everybody in the company is pooled, and the employer can negotiate a lower premium.
Wow. So I just want to emphasize something that you mentioned that I think is really interesting. That insurance isn't just for recovery after some incident, that it is a sort of safety net that allows some people to operate, to have the confidence that they can enter some business.
Yeah,
that's interesting. Do you have some other examples of where that's kind of allowed people to do business? And do you see the same thing happening with cyber risk insurance? So one of the thoughts I had before this call was, is the future of cyber risk insurance a requirement to have cyber risk insurance so that everyone's bought in, so that there's some standards applied to how people, did we lose Leroy? Yes, we lost Leroy. Stand by. I'm sure he will be back. Network connection issues do happen. It's okay. The last time I was doing one of these, I was moderating, and as soon as a question came to me, my network died. So I have some empathy for what's going on. Let's give him a few moments to rejoin.
Hi there. Speaking of cybersecurity, my company has force restarted my computer for a cybersecurity update. So,
so that's actually a perfect example of what I'm talking about, right? Because it is some sort of standard that you can expect. So what I was getting at was that insurance could potentially become, or do you see insurance becoming required, right? Like in New York City, apartment insurance is required. Car insurance is required. You can argue whether or not that makes sense, but is that, do you ever see that happening with this space? And do you think it's actually helpful because of the safety net aspect?
That's a really interesting line of thinking. So, I mean, I'll give you an example just with cars again. Like, some people might be willing to drive a car no matter what, without insurance, etc. For some people, it might be too big a risk to get behind the wheel of a car if you knew that, potentially somebody could, you could cause enough damage that you'd be bankrupted, right? Like you would have to pay out the wazoo to pay for somebody's medical bills or fix their Lamborghini that you bumped into, or whatever it is, right? And so you could imagine that for some people that would be an unacceptable risk. I'm not going to drive a car if I could incur financial penalty, and so insurance allows them to feel comfortable getting onto the road. So I'm just going to sign in.
That's me. I'm one of those people.
And so, I mean, yeah, if you asked, do I see cyber insurance becoming mandatory in the future? And I think it already is for many businesses. They say, you know, if you're a vendor or if you're in a close relationship with us where we have some sort of network interactivity or you use our network in some way, you have to carry cyber insurance. So we do see that. I think we ran a survey, and of course the organizations that are part of our survey world tend to be some of the bigger ones. So it's not necessarily indicative of, you know, the whole universe of businesses, including small and medium enterprises. But I think it was on the 40% mark among our survey respondents that said we require our vendors to carry some sort of cyber insurance. And, you know, that is a way, especially because of the way the insurance industry is going. And we might, again, come back to this later, but there is increased requirement basically for higher standards to get cyber insurance. You can't just sign up for cyber insurance and say, please cover me. They're going to be coming in. I mean, it used to be just a questionnaire, but now in some cases they want to, you know, see your network set up. They want to have ratings from companies like BitSight or from Security Scorecard. These are companies that do cybersecurity ratings. And they're doing a whole bunch of I mean, the same sorts of actuarial modeling that they do for regular coverage before. Oh, and sorry, and they want to confirm that you were doing some of the basic, what we call cyber hygiene things, like using multi-factor authentication or doing weekly backups of your data. And if you're not doing that, they're not going to cover you at all. So, you know, if you have cyber insurance, it sort of signals that you have some sort of minimal cyber protocols
yeah
to be able to get the cyber insurance.
Yeah. So Leroy, if you're ready to go back to your deck, we can do that, or we can explore that topic some more because there's a lot in there that I think is also fascinating.
I am launching my thing still. So why don't we actually, because you mentioned something really interesting about, you know, insurance not being just for, you know, financially, like paying back somebody the money that they lost. In cyber insurance, that's particularly the case, because one of the primary uses for cyber insurance, especially for small and medium enterprises, is that cyber insurance connects them with a whole bunch of ancillary resources they wouldn't typically have access to. So if you fall victim to a ransomware attack and you're a small and medium business, like, what are you supposed to do? You know, how hopefully you don't have any experience of negotiating a ransom. Hopefully you don't have any experience like having a Bitcoin wallet that you have to keep track of. And I'm going to switch over now. So you might be lost without access to some of this extra support that a cyber insurer can provide. So they're gonna put you in contact with a ransom negotiator. They are going to put you in contact with somebody who can pay the ransom for you. They're going to put you in contact with an incident responder, so somebody who can come in and sort of figure out what went wrong, try to make sure that these people get out of your network and can't come back again. And then, you know, somebody to do maybe forensics or disclosure or, you know, legal stuff. So all of these ancillary services are part of the value of cyber insurance. And so, you know, it sort of extends beyond just the, okay, if I lose some data or if I have to recover from this incident, you're going to give me some money. It's much broader than that.
Nice. Maybe we'll touch on that again later. I have some thoughts there as well.
Sure. All right. I am. Let's see here. There we go. Thank you for bearing with my technical difficulties.
No worries.
Got it. Okay.
Okay, so then we get to Lloyd's, which might be a very familiar name for people on the call. So way back in the 17th century, 1688, coffee houses are where, so there's a place that was called the Royal Exchange. That's where the actual business took place. But coffee houses that were around the area for the Royal Exchange in London is where sort of the hobnobbing went on, the deals were discussed and things like that. And so lots of different coffee houses had their own clientele. And Lloyd's was the clientele for maritime insurance. So people would discuss insuring ships, and Lloyd sort of actively recruited and curated his coffee house as a place where this could happen. And so, yeah, from way back 1688 up until now, Lloyd's has been operating in insurance as something that many people are familiar with. And then another sort of contributor to the insurance industry as we know it today is actuarial tables. And so Pascal might be a mathematician that you've heard of. Fermat in 1654, they wrote this theory of probability. And so using that math, that's how they were able to come up with actuarial tables, which allows people to do things like figure out how likely is it, when you reach a certain age that you're going to die, morbid things like that, so that you can figure out how to price insurance policies. All right, this is one of the great first tests of insurance, the Great Fire of London. It destroyed 14,000 buildings, left many homeless, and so the maritime insurers decided that fire and life insurance would probably be a good thing to include as part of the policies they offer. And so they did that. This is also a very good example of something that is called either contagion risk or I forget what the word is, agglomeration or something like that. It means that there are a lot of insureds are being hit by the same incident. And so it can be potentially disastrous for the insurance company because they're banking on the fact that fewer people are making claims than are paying in through their premiums. And we're going to see that come back again for cyber insurance as an interesting sort of challenge that faces the industry. I'm going to skip over this and go to insurance adapting to new tech and risk. So these are all insurance categories that we are pretty familiar with. Disability life, reinsurance might not be as familiar. That is insurance for the insurance companies. So again, we mentioned if you're an insurer and you've taken on a whole bunch of risk, let's say that you're a property insurance person and you've had a hurricane in Florida, and you have basically the whole state of Florida is filing claims, and half of the people that you insure in Florida, that's going to be a really big problem for you. And so the insurance companies have their own insurance. It's called reinsurance. And that insurance is meant to make sure that if the insurance company is running into issues, they can call on that policy to help financially mitigate the losses that they've experienced. All right, so again, this is getting back to what Jean was talking about before about influencing behaviors. This specialty insurance is around the advent of steam power, but these steam engines were not very safe. So people kept dying, they kept exploding, so you're losing lives, you're losing money. So the Hartford Steam Boiler Company decided that if there were higher standards in how these machines were being built, then this would reduce the deaths, reduce the damage to assets, and also, ultimately provide for better profitability in the long term. So they provided that inspection, and once you were inspected by them, then they would insure you. And so that provides this level of, okay, well, this company has gotten this insurance. That means we know that they have passed some level, some minimum level of qualifications for safety. And then, you know, you can translate that to the cyber realm, that it could be similar for that as well.
That's actually interesting, right? There's a lot of overlap there with maybe what's happening with, well, different businesses, but including social networks, right? They're getting sued on a regular basis about what someone did because of something the social network did or didn't do. And it does make me wonder if they're going to start relying on this type of cyber insurance more to help address those cases, and specifically with that those trains and steam engines. It also makes me wonder if the additional safety checks that have to be done for you to get insurance would actually be used to promote the business. Like in business, like business to business interactions, I'm certain. Well, I could say I can confirm that happens, right? You would advertise to your partners, investors, and so on that you're taking these steps because they should feel better about it. But I wonder if in the consumer space the same thing is likely.
Yeah, I hope. Unfortunately, we're still. I think a lot of this is attributable to the fact that many cyber folks are coming from, like me, intelligence agency or from the military, and so they have this very blinkered, in my opinion, view of cybersecurity. It's like, it's a secret. Don't tell anybody about it. Even if you're, doing things well, right? Less information is better. And I think that if we're able to get out of that mindset and say, okay, there is information certainly that we don't want to be sharing with everybody, but being able to share minimum information so that people know and have some confidence about our cybersecurity posture, the measures that we're taking, right? That's helpful for everybody. It's helpful for investors. It's helpful for your vendors, people who want to do business with you, right? They want to have some sort of confidence that you're operating safely, and cyber includes cyber. I think we're moving in that direction, especially with some of the disclosure requirements that are coming down the pipe. There's an SEC disclosure that is currently being proposed. The comment period just ended, but it would require things like identifying the person at your organization responsible for cybersecurity, what kinds of experience they have. Is it just like a university degree? Is it hands-on experience? Is it a certificate they did over the weekend? And then also would require reporting of any ransomware payments made, as well as material cyber incidents that have happened to the organization. So there's that, and there's also some reporting requirements for the Cybersecurity and Infrastructure Security Agency. It's called CISA. And that is the idea that there's all these attacks happening that companies aren't reporting because they don't want to look stupid. But the government can't mount an adequate response if they don't know what's happening. So there are some mandatory reporting practices or mandatory reporting disclosures from CISA for what they call critical infrastructure companies. So think, oil companies, the transportation, critical transportation, food, agriculture. These are sort of the things that financial system, if they went down, it'd be a bad day. And so they have to report certain incidents to CISA within a certain time period, so that CISA can take that information, share it more broadly, and make sure that the attack doesn't spread, and that you can tamp down or mitigate the effect of those attacks. Any other questions? All right, there are still some. I mean, we do have a very robust and growing cyber insurance industry. There are still some people who don't think that cyber risk is insurable. So they're going on this made whole doctrine, that the goal of insurance is often to make the insured whole again. by replacing the car, by paying, the medical bills. In some circumstances for a cyber incident, like how do you, if somebody's information is sort of put out in the universe, how do you how do you make their information private again, right? It's not necessarily as intuitive. There's even been a number of cases where people have tried to sue for a data breach because their information has been exposed. And based on current, at least US legal jurisprudence, you have to prove some sort of harm. So how do you prove harm that your information is out there, unless something specific like, somebody stole your identity, racked up a bunch of purchases in your name by taking, going out and getting credit using your information or something like that. But if they just stole your information, that might be very, what's the word? You might be very upset that happened, but there might not be any legal recourse if you can't prove that this has damaged you in some respect. All right. So this, I think, is really interesting because there are a whole bunch of players in the insurance field, and it's not, before I worked more closely on cyber insurance, it wasn't very clear to me who they were, what their role is. So you have these brokers or agents, you have carriers, and we already spoke about reinsurers. So you have a sense of who they are. So the brokers are the folks that you actually are speaking to as part of the underwriting process. So they have a legal duty with the person who's seeking insurance to make sure that you are obtaining whatever coverage you're looking for and helping you navigate that process. So these are some of the names that are well known for being brokers of cyber insurance, and they have done they've basically put a lot of efforts into their cyber insurance work. They've hired a lot of cyber insurance folks, like people who typically were working in information security or cybersecurity specifically, and have sort of brought them in to say, hey, think about this question from a cyber angle. And so they do a lot of really interesting work modeling cyber risk, hunting down data to feed their models. And again, these are the frontline folks that organizations would have the direct relationship with when they're looking for a cyber insurance policy.
Quick question on that. So I was wondering if there's any situation where an insurance provider or one of these intermediaries involved in that process would have direct access to data from the business that they're insuring. Is that a thing?
Yeah, absolutely.
Including in real time, meaning not just like auditing to see can you be covered and at what rate, but also once the policy is in place?
Yeah, so maybe some of you might have heard of, there are auto insurance providers out there who, if you sign up for a specific program, you can have them put a little device in your car that looks at how you drive, does the driver continually go over the speed limit? Are they braking really hard? And then they use that data to give you a break on your premium if you're a really good driver, or to jack your rates up if you're not a good driver, right? And so there's something similar for some cyber insurance brokers where you can have some sort of implant in your network that is looking at what's going on, that can see what types of safety protocols have been put in place, and if they're being respected, and are sort of monitoring real time the networks. And that is really great as well, because the insurance companies might have people looking to see when something's happening. And again, this is really good for those small and medium-sized enterprises, because they might not have a dedicated cybersecurity team. But their insurance company is looking over their shoulder and said, hey, you might want to look into that. This looks weird. Or they're seeing something in somebody else's network and they say, hey, we're seeing a whole bunch of things targeting the retail sector. Watch out for these certain indicators that we've been seeing in other places. And so it can help act as a prophylactic to protect somebody else. So yeah, we're absolutely seeing that.
Thank you. It's really interesting. I want to expand on that a little bit more. And interesting example actually with driving as well. I personally hate those programs. I think that they're awfully invasive. You can design them to be, reasonable, but I think it's a challenge. Though I also think that there is a use for that, especially when trying to establish a baseline, right? Could you incentivize some part of your insured audience to run this for a period of time so that you can understand what that baseline risk is, and then set the rates based on that? Things like that can be done. But the fact that this is being done in business actually makes me more comfortable with the situation. And this kind of leads to this thing I've been thinking about related to this topic in terms of compliance and the difference between having some sort of certification and having insurance. Because in my experience, including some of these security-oriented certifications, you can maintain the claim that you meet their standard, even if you're failing it, often for a protracted period of time. Some of them will give you like a year to address something before you even have to announce it, much less, say that you no longer have that certification. What about insurance? If you have, at least in cases where you have such links to the business, can your policy be suspended, paused? Are there disclosure requirements to that? Because now, first of all, I think compliance is very important. I do think it's not just a checkbox, but it has limitations. And maybe one of the limitations can be addressed by insurance in this way. Is that the right way to think about it?
I'm not sure that I understood entirely. So you're saying that
with compliance, you get a leeway. You get a lot of leeway. And a lot of it depends on your own self-reporting over a protracted period of time. If your insurance company is looking at what's happening with your, let's say, network or data assets and is finding risks, there could be a demand for remediation much sooner because it's not voluntary based on third-party information.
Yeah, absolutely. Yes, and this underwriting tends to happen on a yearly basis too, so you can't go like multiple years, with some glaring problem and then expect to keep getting insured. They're most likely going to catch it. I mentioned that they're using these external scanning companies like BitSight and Security Scorecard as well to assess the cybersecurity performance of these potential insureds. And so that is continuous. That's happening all the time. The score changes, every day, every couple of hours, whatever it is. And so there is sort of like, their feet is to the fire, I guess maybe you should say, because it's not only insurance companies that are using it, but vendors are using it for what we call third-party management. And so it's happened to Moody's, it's happened to other companies where your vendor will call up and say, hey, your score went down 50 points or whatever, what's going on over there? And what are you doing to remediate it? And it doesn't mean that the relationship will immediately be axed, right? But they want to know, are you aware that something's wrong? Do you have a plan to fix it? And typically, there's some sort of expectation for an organization, or many organizations will put the expectation in place for themselves that a certain percentage of our vendors are going to be in the advanced category, in terms of the BitSight or Security Scorecard rating. So if you're not meeting that threshold, then you can't be on a long-term basis part of their preferred provider category.
Interesting. Okay, that's really good to know. Thank you. And that's really what I like, the kind of proactive nature of this, right? Because you can't easily ignore this because there's an external party that you're paying specifically for this. So you probably want to do something about it. And of course, I assume that most people are welcome that information because that's in fact what allows them to keep operating. So just a quick time check. We're about 10 minutes from the top of the hour. We have some overage for maybe up to half an hour if Leroy, if you're still okay with that. And if everyone on the line is interested in staying longer, you can let us know. But let's go through some of the next highlights that Leroy, you think we should talk about in the next 10 minutes, and then we'll see how people feel.
Yeah, so actually what I'll do is I'm gonna abandon the slides for now and talk a little bit about what's happening right now with cyber insurance. So I mentioned ransomware attacks. Would anybody like to tell me what a ransomware attack is? I think a couple of years ago, I wouldn't ask that question, but now I think folks are pretty wise. So
Yeah, it usually involves you know, a criminal hacker outside party who somehow, you know, gets control of your digital assets and prevents you from accessing them, usually through encryption.
Yeah.
And to get access back, you know, they usually put those back up for ransom to you. You have to pay something in order to get the access back. They'll give you the unencryption key. That's generally how it works, right? When people
Yep.
are held for ransomware.
that's perfect. Yeah.
Yeah.
Thanks, Al. Yeah. So I mentioned that, you know, the cyber insurers had done a lot of work in ensuring data breaches, which weren't that costly. These ransomware attacks have been much more costly because, you know, you have business interruption that can be a result of that. So you're not able to produce, you're not able to service your clients. So you might be losing revenue. Then you also have data breaches that have become a part of ransomware attacks. So not only do they lock all your data up or lock your systems up, but they steal information while they're doing it as well. And so that, especially in an environment where there's a proliferation of these data privacy laws, that can cause a lot of headaches for you as well, with fines and settlements that can be very large. So ransomware attacks are just much more costly than data breaches are. And so it really played with the models, or it really messed up or screwed with the models for these insurance companies. And so they've been on the hook for losses that they just did not expect to be doing. That's, you know, back to the theme of cyber risk continually evolving. So when we, in sort of the mid 2010s, ransomware, sorry, I should go back and say ransomware has been around theoretically since 1989. The first ransomware attack was on a floppy disk. It was called the AIDS ransomware variant. And it was called that because some guy distributed by mail these floppy disks with what he said was information for AIDS researchers. And so he sent this information to a bunch of AIDS researchers and said, hey, here's some valuable data for your research. They put it in. It looked like it did actually have some data on it, but then once they booted their computer off and then they rebooted it, then it was locked up, and you had to send a money order to Panama to get your computer working again. And so, you know, that obviously has many drawbacks. The main one for the criminal being that they have to go show up somewhere in person and pick up the money that's being sent. And so they found the person responsible for that and, you know, put them in jail. Starting around 2012, you know, when cryptocurrency started becoming more readily used, ransomware attacks, they had the means to do the financial, you know, to move money around. And so then it became a much more viable form of attack. And so in the mid 2010s, we saw ransomware attacks on a smaller scale, like against grandmas, grandpas, people who weren't very, you know, technologically savvy, started getting hit by ransomware attacks on their personal computers. And these ransomware amounts were, you know, $300 to maybe $600, $700, you know, which is not nothing, right? Especially if you have a family that's not doing well financially, but you know, it's on the lower end in terms of the financial impact from these attacks. Sometime around 2017, 18, and then especially exploding through 2019 and into now, they started turning away from individuals, just sort of wantonly spreading ransomware to anybody who would click on it. And they started focusing on businesses and doing sort of targeted attacks, and then upping the ante for the amount. So it's no longer $300, $400, but it is, you know, tens of thousands of dollars, hundreds of thousands of dollars. And then more recently, the highest amount that I've heard of is $50 million for these ransoms. And as a result of that, this has walloped the cyber insurance companies, especially in some of the hardest hit sectors like government, school districts, manufacturing, even colleges and universities, right? They have just been hit so hard by these ransomware attacks. And so the insurers started losing money. It wasn't profitable for them. And some withdrew from the cyber insurance market entirely because they're like, hey, we weren't ready for this. We thought we were doing data breaches. Like, let's get out while we still can. And then for some, especially in those hardest hit industries, the premiums went up 300% year over year. They have also shrunk coverage, and so they're not covering as much. So you're paying, 3 times as much, but getting maybe a third of the coverage you were getting before. We're just seeing lots of turbulence in the cyber insurance market as these insurers figure out how better to deal with the risk. Now, we talked about some of the ways that they are, again, much more stringent underwriting practices, having these sort of, views into the networks of the folks that they're insuring to understand better what's going on there and better pricing the risk accordingly, doing what they call cyber risk quantification, which is running a bunch of simulated scenarios along with the financial profile of the entity, and then using that to say, okay, if you have a ransomware attack, this is the likely range of losses that you'll have. If you have a data breach, this is the likely range of losses that you'll have, and using that to better understand their exposures to cyber risk. But the sector is in a lot of flux right now, and we're not sure what we'll see going forward. I think I'll say like 2 more things and then stop to see if you have any questions. One is that we're seeing some interest in what they call captive insurance arrangements. And captives are where, non-traditional insurance lines where it might be difficult to get the coverage that you need. Organizations will band together and those sort of
It is 3:00 p.m.
Sorry, those sort of insure amongst themselves against a particular risk category. So I've heard from some cyber insurance practitioners and from some of the entities that we rate that they are not able to get the insurance coverage that they'd like because the coverage limits have decreased. And so they're banding together with like-minded organizations and creating these captive insurers. For some state and local governments, they call it joint insurance funds. And so they all pay in together and then they pool the risk. And then the last thing that I was going to say is there's a lot of talk right now about the war exclusion, especially with the conflict that's happening between Russia and Ukraine, where in 2017, there was this big attack called the NotPetya attack, where multiple governments have said that the Russian military intelligence, GRU, they used the software for a tax company, accounting company in Ukraine, that all folks that file taxes in Ukraine have to use that accounting software. And they put a bug in it and then spread that to all those organizations. And then many of those organizations didn't have the necessary security segmentation or policies in place to stop that from spreading throughout the world to all of their, to all their business, basically. There's a really interesting write-up in the magazine called Wired magazine about the NotPetya incident. The most interesting part of that story for me is that, there was a company, I think it was Maersk, which is a large shipping company. It's based in Denmark. And they their whole system was down. They had no way to recover their data. And they realized that there was one copy of their data in Ghana, in Africa, because that office lost power during the cyber attack. And so they had to fly somebody down to Ghana to get the one copy of their data that they could recover from, and then fly it back to the headquarters and then use that to recover. If they didn't have that, right, that would have been devastating for them. And they already, I mean, the attack, they said publicly, cost them $300 billion. So you can only imagine, how much more that would have cost for them if they weren't able to get a copy of the data to rebuild from. But anyways, the point I brought that up is that some insurers, not standalone insurance that only provide cyber insurance, but those that are property and casualty that had some sort of cyber coverage, a number of them denied claims filed for that incident because they said, well, all these governments said the Russian military, launched this attack. So it's a military attack. It must be an act of war, and we don't cover acts of war. That is an exclusion under our policies. So they said that they weren't going to pay for it. Just recently, in December and into January of this year, 5 years after the incident took place, there was a ruling in New Jersey where they actually ruled for the insured. They ruled for Merck, the pharmaceutical company, and said to the insurer that, you did not word this policy in a way that that Merck would know that they did not have coverage. You had plenty of time to change the wording to make it clear what you were excluding and not excluding, and you didn't do that. So you need to pay $1.4 billion in damages to Merck that they sustained as part of the NotPetya incident. So I'll stop there and see if there are any questions.
I like the Hartford steam boiler example, right? Where you have insurance company that's actively participating and making sure everything's okay. That seems to me would bring a lot of value, not only to the insurance company, but for the company that they're working with to know that their, in this case, steam boilers are not going to blow up.
Yeah.
I wonder if something. I wonder if more active participation like that we can expect on the cyber side. Where insurance companies, or maybe it's other organizations that participate in the compliance process, kind of look into more deeply what the company is doing to keep themselves protected from cyber risks.
Yeah, I like that you brought that up because we've had a lot of people collaborating with us, and us being Moody's, the credit rating agency, because they see us as a leverage or a lever of pressure for these organizations. Now, our job is only to rate the organizations, but by including cyber considerations as part of our credit rating process, for some people, they're saying, hey, this is going to force them to, change their behaviors, to be better about cyber, to have more robust policies, and to communicate more about what they're doing, to disclose it, at least with the credit rating agency. So somebody is seeing what's happening. They can't just hide behind a wall and say, yeah, everything's great here. And I can tell you, in the couple of years that I've been at Moody's, the conversations that we've had with issuers, we call them debt issuers, has changed dramatically. So, in the beginning, it'd be like, nothing to see here. We have cyber, it's great. Everything's wonderful. And now we're having much more in-depth conversations. They come to us in their decks. They have a whole cyber sector. This is the framework that we have. This is what we're following. These are the main risks that we are facing. This is how we're dealing with that, right? So even though, our job as Moody's is not to force people to, do better cybersecurity or anything like that, but because we're including it more, robustly as part of that process, then they have to change their behavior, improve their behaviors.
Yeah.
Thanks for letting me know. I'm going to be in a few minutes. Okay. Thank you.
I guess that's good to hear. the rating agencies, they can rely on documents like, you know, income statements, balance sheets, regulatory filings, quarterly, you know, quarterly information that's shared by companies in order to assess, you know, what the developing credit risk may be, right? Or maybe it's improving credit risk. On the cybersecurity side, I don't know today if there are similar documents, right, that would more precisely measure, other than what a company may disclose on their own in a PowerPoint presentation, that, you know, due to goodwill, they may be motivated to, you know, share more information. But, you know, it sounds like we may need some standardized way of sharing this information across the industry and the regulatory process to assess it. Does that sound right? Is it asking too much? And if it does sound right, is something like that, you know, has it been considered or being talked about?
I may interject just very, very quickly. One of the kind of assets that could be released in this way is a pen test report or a pen test remediation report, where a business that's insured is for very normal reasons, but also probably because insurance requires it. It may have a third party retained to assess their systems, their products, and document any issues that they might have. And then the remediation part of it. So we found out, this is what we fixed, this is how long it took. Now, typically this information is not made public, and many companies are very, let's say, apprehensive about doing so. But that would certainly fulfill at least some of what you're discussing. Now, whether or not there's any specific pressure or, let's say, plan to make that required, I'm not aware of that right now. So something we should ask for.
Yeah. And this, yeah, sorry to interrupt, Leroy, but it's what you said is just kind of making me think there were broader recovery, you know, processes, right? So how companies, you know, do business continuity, how they do disaster recovery, how they exercise those things, right? You know, FINRA as part of the financial services industry, they have a yearly. It's a very collaborative thing. It's not mandated, but if you don't participate, I think it's frowned upon. But FINRA supports this yearly recovery test, where companies can go in, you know, like if I'm a company and I rely heavily on Bloomberg, right, for, you know, for trading or for market data or whatever it might be, Bloomberg will make their disaster recovery facilities accessible during that test period. And other companies like Bloomberg, right, you know, Chase, Citibank, whoever participates, they will make their disaster recovery systems available on a test basis, and, you know, we could go in and connect to those systems and make sure our systems are communicating properly with them, right? So I wonder if, you know, so a company can have a significant outage due to a cybersecurity incident, but I wonder if the bigger picture that we should be thinking about is just recovery in general.
Yeah, I mean, I like the focus on the recovery, because we in our conversations with the entities that we rate, you know, we make sure to tell them, because they're not used to having these conversations with us, and so they're sort of very leery about, you know, why are you coming to us and asking us questions about cyber risk? And so we tell them is we're very interested in your resilience. So we don't necessarily care that you have. We expect that basically every organization is going to have some sort of cyber attack given a long enough time horizon. What we care is that you have plans and measures in place to be able to recover from the incident and to continue, because again, Moody's is all about credit. So we want to make sure, we want to see that you are able to continue servicing your debt. And so as long as you have a plan in place that is allowing you to recover in, you know, enough time and with enough wherewithal to continue whatever business process you have,
and continue the revenue and meet your financial forecasts and things like that, then then that's great from our viewpoint. On your comment about like anybody providing some sort of information about what companies are doing internally. So I mentioned BitSide and Security Scorecard that do the external portion. So they're sort of scanning the internet just like a cyber criminal would to see if there are any weaknesses or vulnerabilities in a business, and then scoring them based on that or rating them based on that. I work at Moody's. The person who hired me at Moody's actually left shortly after, and is now working at BitSite in a part of the company that is doing internal assessment. So not just scanning from the internet, but actually working with the company directly, going in, putting stuff on their network to see, how does data move around, what kinds of security things are in place, and then using that to come up with sort of an enhancement to the rating. So, okay, here is the rating just looking at the outside, but here is a much more, higher fidelity rating based on, based on actually being inside the network and seeing what's going on, and seeing the mitigations and stuff that are in place. And then the company being able to use that to say, hey, look, I got rated by blah, blah, blah. I have excellent cybersecurity, or at least, here is the level of cybersecurity I have, and provide that to their vendors, to regulators, to whoever.
Right. Well, that's good to hear. I imagine BitSite is doing well with that type of service. Are you familiar with any downgrades that Moody's has done, or any other credit rating agencies specifically for cyber issues?
Yeah. So at Moody's, there's a handful. One happened in 2014. It was the name of the company is Altegrity, and they were like a provider to OPM, the Office of Personnel Management, and they fell victim to a cyber attack attributed to Chinese government hackers. They stole information, so the government ended up canceling the contract with them, and they were heavily dependent on government contracts. So they went bankrupt, and Moody's downgraded their rating. The second one is Equifax in 2017. They had a large cyber attack that many people are familiar with. Data on basically every American was stolen. And then in 2019, the legal settlement came out, and they also announced sort of the financial impact internally that this had from recovering and also implementing new cybersecurity practices. And that came to $1.2 billion, which is much higher than had been anticipated. So we downgraded first their outlook, and then actually their rating. And the last two are interesting. One is a SolarWinds incident. I don't know if people are familiar with that, but it was the software company that somebody got into their update, the Russians again, attributed to them, got into their update and blasted it out to all of their customers as a way of potentially being able to spy on all of these businesses' operations and government entities' operations. And so we immediately put them under review. But after a number of months, we saw that didn't really change their business operation. They didn't lose clients, they didn't lose revenue. So we affirmed their rating. And then the last one is NSO Group, which creates, some people call it spyware. Some people call it, they call it illegal government intercept software. But basically, you put it on somebody's phone, and it allows you to see whatever's on their phone, maybe even turn the microphone, listen to what's going on, turn on the camera and see what's, whatever the camera sees. And they have gotten in so much hot water because a lot of their software has ended up on human rights defenders' phones, activists for, women's rights, or, different things, politicians, right? They don't like that.
So, they've gotten so much negative publicity that they've lost a lot of business, and so Moody's downgraded their rating as a result of that. So they didn't suffer a cyber attack, but because of the cyber attacks that they have enabled.
Right.
Yeah.
Yeah, I mean, interesting. Credit downgrades companies are going to pay particularly sharp attention to. So that's one way to get the message through that it's important. I'm wondering about the underwriting process that insurance companies might go through for this. You know, with the example you gave before about errors and omissions, and which is sort of like a business, sustainability, type insurance, right?
Mm-hmm.
And I'm partly taking a guess here. I would think, as an example of an insurance company insuring a plant or a factory, right? They probably, I would imagine, again, taking a guess, they probably know wherever that plant is that there's going to be yearly fire inspections, maybe more frequently than that. There might be electrical inspections. The municipality the plant operates in may have other requirements for what the plant needs to check up on, just to make sure they're not, having any problems or causing any issues. I imagine that those things, right, that an insurance company may know exist, they leverage in the underwriting process. Does that sounds right?
Yeah.
Yeah.
Absolutely.
So then are there things, I guess it's sort of like the question I was asking before, should we have more formal disclosures around how we do our cybersecurity, right? I'm wondering if there are things like that, right, that the insurance companies may tie into, right? Is there something like a yearly fire safety check for a plant for cybersecurity? Is there something like an electrical inspection, right, that the insurance company can develop some confidence in, because they know it's going to be a requirement of some other organization for the company? Are there things like that they try to build into their underwriting models?
Yeah, so Gene mentioned something like that, which is penetration testing. So that's when you hire someone to come in and see if they can get into whatever systems you designate as being, critical or important for your organization or in scope for that engagement. They come in and see if they can get in, and then they write you a report that says, this is how we were able. Usually they do get in, so they write you a report saying, this is how we were able to get in. These are some of the mitigations that you should put in place to make it harder for somebody to get to, these important systems. And if they are able to get there, to lessen the damage if they are able to get there. Then you have a next category, which is red team testing, and that's like you have a whole team of people who are sort of, not just in a limited time engagement, but like over maybe 6 months, plotting and planning and trying to get into your system. And for the lower level penetration testing one, that is not, I would say it's not necessarily a requirement for, I haven't heard of any insurers requiring that to get insured, but I know that for some industries it's a requirement. So for banks, they have to have a yearly, maybe even more frequent cadence, but I think it's at least yearly penetration test as part of government regulations. So it would be great if more organizations had that type of requirement and had to have the requirement and then also had to remediate based on what they got back, because you can just have it and they can come in and give you a report, but you have to actually take the information and the suggestions they give you and implement them. So having that as a requirement would be really would move the needle, I think.
Mm-hmm. Yeah.
And I do have to run because I have a 7-year-old who needs my attention.
Okay. Yeah, I thought it might be a little one back there.
Yeah.
I might have guessed that. Yeah.
Yep. Thank you, Leroy. Thank you, everyone, for joining. Fascinating topic. Clearly, a lot, left to think about. But I certainly learned a lot. I expected that, but still, I'm walking away with more than I thought. And yeah, I really appreciate it. We'll send out a link to the recording afterwards, so you can follow up with us if you want. Again, check out nycresistor.com or resistor.nyc. Check out our other events. Let us know what you want to hear about, what you want to join and do in person as well, if you're able to come to Brooklyn. And yeah, we'll do more of these. Leroy, thank you so much. I think, yeah, let's return you to family time.
Thanks, everybody.
Thanks very much.
Bye, everyone.
Take care.